What if the bank account you're using right now is quietly working against you? For many women navigating life after divorce, there's an illusion of financial freedom. But behind the scenes, old account setups, shared access, and outdated beneficiaries can leave you exposed in ways you'd never expect. It's not just about money. It's about power, security, and the ability to start fresh on your own terms. Too often, post-divorce finances get handled like a checklist. Close one chapter, open another. But banking doesn't work that way. Small oversights can snowball into big consequences. Missed deposits, drained accounts, or credit damage tied to someone you thought was out of your life for good. And most women don't realize these traps exist until it's too late. In this video, we're going to break down 5 banking changes that are absolutely critical after divorce. These aren't just helpful tips. They are protective moves that quietly rebuild your financial foundation, restore your independence, and give you real peace of mind, without needing a law degree or a financial advisor to decode it all. If you've ever felt unsure about where your money goes, who can access it, or whether your accounts truly reflect your new life, stay with me. Because what we're about to cover could be the difference between quietly surviving and confidently rebuilding. Let's dive in. The first thing most women don't realize after a divorce? Your old bank accounts may still be tied to your ex in ways that don't show up at first glance. Even if the name's off the account, the digital fingerprints often remain. Linked phone numbers, shared auto payments, or even saved devices that allow access through apps. This is where many fall into a dangerous sense of, it's fine. But here's the reality. Unless you close old accounts completely and start new ones in your name alone, you may be leaving a digital door cracked open. And in the world of modern banking, that's all it takes. Take Julia, for example. She kept her checking account after her divorce. Her ex was removed officially, but months later she noticed strange transactions. Tiny withdrawals, irregular charges, and then a missed paycheck that never deposited. Turns out, her ex had remembered the login and triggered a password reset using a still-linked backup email. It was messy, stressful, and completely avoidable. The fix? Open brand new accounts from scratch. Not just one, but a full set. Checking, savings, and an emergency fund, all under your name, your email, and your control. Update every payment connection, utilities, mortgage, subscriptions, to those new accounts. It may sound tedious, but it's your clean slate. It severs financial ties in a way that paperwork alone never will. And if you're worried about losing transaction history or account perks, download your statements, keep what you need for tax or legal purposes, and then move on. Don't let emotional comfort keep you financially exposed. But breaking free from old accounts is just the beginning. Because what you do next with your new accounts can either build your confidence or silently drain it. Let's talk about that next. Once your new bank accounts are open, there's one move that can completely change how you feel about money after divorce. Separating your spending into safe and rebuild zones. Here's what that actually means. Most people, especially women after a major life shift, keep everything jumbled in one account. Bills, groceries, personal spending, savings goals. It all flows in and out of a single bucket. And without realizing it, that chaos creates anxiety. You can't see where you stand. You hesitate before buying anything. And worse, you might start blaming yourself for being bad with money, when in reality, the system is just broken. Instead, open 2 separate checking accounts. One for essentials, one for rebuilding. The essentials account is for your fixed monthly needs, rent or mortgage, utilities, phone, insurance, groceries, and minimum debt payments. This is the account you automate. Money comes in, bills go out, no second guessing. The rebuild account? That's your control center. It's where you fund your new future. Emergency savings, travel plans, debt payoff, even guilt-free personal spending, it all starts here. And by separating these zones, something subtle happens. You stop fearing your bank balance. You start thinking strategically. You feel in control again. Take Sandra, a 52-year-old teacher who was drowning in financial confusion after her divorce. When she split her banking into these 2 zones, she told me, "It's like I finally knew where I stood. And that changed how I walk through the world." And here's the best part. This isn't budgeting. It's boundary setting. It doesn't require spreadsheets or apps. Just 2 accounts. One for surviving. One for thriving. But once you've created those zones, the next problem comes from a surprising place. the debts you didn't realize you were still sharing. That's where we're heading next. One of the most dangerous financial traps after divorce is assuming all shared debts were split fairly. But here's the truth most people find out too late. Just because the divorce decree says your ex is responsible for a certain debt doesn't mean the creditors agree. If your name is still on that credit card, car loan, or mortgage, even as a co-signer, you're legally tied to it. And if your ex misses a payment, it's your credit score that takes the hit. You could wake up to a collections notice for a bill you haven't seen in years, all because your name was never properly removed. This isn't just a financial issue. It's emotional. After going through the pain of divorce, the last thing anyone wants is to stay financially entangled with someone they've worked so hard to separate from. That's why reviewing your credit report is essential. Not optional. Essential. It's the only document that shows every account tied to your name, even ones you forgot existed. Request a report from all three major bureaus: Experian, Equifax, and TransUnion. Comb through it line by line. Highlight any joint accounts, old addresses, unfamiliar loans, anything that could tie you to your ex or expose you to risk. And don't stop there. Call the lenders directly. Ask for your name to be removed. Close inactive joint accounts. Refinance anything still shared. Yes, it takes time. Yes, it can be uncomfortable. But what's more uncomfortable is being held responsible for someone else's financial choices. Think of it like cleaning out a closet full of old, dusty items. You're not just making space. You're protecting your future from what's no longer yours to carry. But even if you've cleared out the debt, there's another silent danger most women overlook. Passive money leaks that drain your income month after month. And what causes them might surprise you. Let's talk about that next. Let's talk about something that almost no one brings up after divorce. Subscriptions, autopays, and silent withdrawals that quietly drain your money month after month. It might sound small, but this is where a lot of women unknowingly lose control of their finances after the paperwork is signed. During a marriage, it's common to set up shared accounts, streaming services, gym memberships, insurance policies, even monthly donations or app subscriptions. But once the divorce is finalized, many of these small charges keep going, often linked to joint bank accounts or credit cards you've forgotten to cancel or unlink. And the worst part? You may not notice it until your account balance seems lower than expected, or your budget feels tighter than it should. I've seen women discover they were still paying for their ex's cloud storage or car insurance months, sometimes years, after the divorce. Why? Because it was set to autopay, and no one thought to stop it. Now imagine this happening across 5, 10, or 15 small services. It adds up. Even a few $10 or $15 charges each month become hundreds over the course of a year. That's money you could be using for therapy, rebuilding your emergency fund, or simply breathing easier every time you check your balance. This is why your first move needs to be a full audit of your accounts, both checking and credit. Print out the last 3 months of statements. Go line by line. Highlight any charge you don't recognize or aren't using anymore. Cancel what's no longer serving you. Then, update your payment information for the things you do want to keep, using accounts that are 100% in your name. And here's something else to remember. If your ex ever had access to your online banking or login credentials, change them. Every single password. Start fresh with secure logins. Because privacy isn't just emotional. It's financial. It's not just about cutting costs. It's about reclaiming your financial space and telling yourself, this money now works for me, not anyone else. But while trimming these small leaks is empowering, there's something even more powerful. And that's learning to rebuild your credit on your own terms. And that starts with a step most women delay far too long. Let's get into it. Let's talk about something many women don't realize until it's already affecting them. Credit rebuilding after divorce. Because here's the truth. Even if you never missed a payment, your credit might have quietly taken a hit during the separation. Joint accounts, shared debt, and uneven financial control during the marriage can leave your credit report looking far different than you expect. And for women over 50, rebuilding that credit isn't just about numbers. It's about regaining freedom. During a marriage, credit history is often entangled. Maybe the mortgage was in his name, or the credit cards were under his account with you as an authorized user. The problem? Authorized users don't build independent credit. So when the divorce is finalized, and those accounts are closed or removed, you're left with a thinner, weaker credit profile than you ever expected. You might even be surprised to hear, "We can't approve you at this time," when applying for a loan, a lease, or even a new credit card. That's why rebuilding credit isn't optional. It's essential. And it starts with opening accounts that are solely in your name. Not joint. Not authorized. Yours. A secured credit card is a great place to begin. It lets you use your own money as collateral and slowly builds a reliable payment history. Then, focus on small recurring expenses, like gas, groceries, or a phone bill, and pay the card off in full every month. This consistent, responsible use tells the credit bureaus, "I'm stable. I'm in control." Also, be sure to pull your credit report from all three major bureaus: Equifax, Experian, and TransUnion. Look for errors, accounts you thought were closed, or balances that don't belong to you anymore. Dispute anything that doesn't add up. It might feel like a hassle, but it's your name and your future creditworthiness on the line. Don't let an old joint account with missed payments drag down your chances of buying a car, renting an apartment, or even qualifying for better insurance rates. And remember, good credit isn't about having tons of money. It's about trust. It tells lenders, landlords, and even employers that you're reliable, that you follow through, that you're starting fresh, but doing it wisely. Once you begin strengthening your credit, doors start to open. Lower interest rates, better financial offers, the ability to co-sign for a child, start a business, or make an independent purchase with confidence. This is the kind of control every woman deserves after divorce. But building credit is only part of the picture. The next piece is just as vital, and often completely overlooked. It's about what happens if something goes wrong, and how to make sure you're the only one calling the shots when it does. Let's get into that next. Let's talk about a topic that most women don't even think about after divorce, until it's too late. What happens if something happens to you? Who makes financial decisions on your behalf? Who handles your money if you're unable to? The answer lies in one powerful tool: updating your power of attorney and financial directives. And skipping this step? It's one of the biggest financial blind spots post-divorce. During your marriage, you likely listed your ex as the person in charge of making decisions if you were ever incapacitated. That includes everything from managing your bank accounts to accessing insurance, retirement funds, or even selling property in your name. But after the divorce, that setup is not just outdated, it's risky. Because if your ex is still listed as your power of attorney, they could legally make those decisions on your behalf in a crisis. And that's the last thing you want. Updating your power of attorney ensures that you're putting that authority into the hands of someone you truly trust now, not someone from your past. It could be an adult child, a sibling, or even a trusted friend. The key is choosing someone who respects your wishes and will act in your best interest without hesitation. But it doesn't stop there. You also need to revise your living will and healthcare directives. Why? Because financial control doesn't just come from managing dollars. It comes from making sure your voice is heard when you can't speak for yourself. And many women don't realize these forms often include permissions related to bank access, insurance claims, and estate handling. Without updating them, your ex could be pulled back into situations that are now completely irrelevant and possibly harmful to your current life. It's not just about peace of mind. It's about protection. With updated documents, your finances stay in your hands, even if life throws a curveball. And here's a simple but overlooked tip. Tell your bank. Once you update these legal forms, make sure your bank, investment firms, and insurance companies all receive a copy. This eliminates confusion and ensures your financial path stays clear, even in an emergency. So ask yourself, if something happened tomorrow, who would legally control your money? If you're not 100% sure, or if your ex's name still appears on those forms, it's time to take action. Because rebuilding financial control after divorce doesn't just mean opening new accounts or changing passwords. It means reclaiming every single legal right that protects your future. And as we wrap up, there's one final piece of this puzzle. One that brings everything together and determines whether your financial recovery stays strong or silently slips away. Let's take a look at what that is next. Looking back, regaining control of your finances after divorce isn't just about feeling secure. It's about protecting your future with eyes wide open. Each of the steps we've discussed today, separating your accounts, updating beneficiaries, adjusting your credit, creating new financial habits, and revising legal directives, might seem small on their own. But together, they build a foundation that can transform the way you move forward. Because here's what most women aren't told. The financial aftermath of divorce doesn't end when the papers are signed. In fact, that's often when the real work begins. And the truth is, your old financial setup, shared names, joint debts, lingering legal access, was built for a life that no longer exists. If you don't actively rebuild, piece by piece, you may be giving up control without even realizing it. But now you know better. You know that your bank account tells a story of where you've been and where you're headed. And you have the power to rewrite that story. You're not just protecting your money. You're reclaiming your voice, your independence, and your future, on your terms. If even one part of today's video made you stop and think, then you've already taken the first step. Maybe it's realizing your ex is still tied to your accounts. Maybe it's noticing your credit was left tangled. Or maybe it's simply recognizing that for the first time in a long time, you're the one making the calls. That realization? That's where the change begins. So here's what I'll leave you with. Don't wait for a crisis to take action. Don't wait until a bank freezes your account or a signature you didn't authorize shows up on a legal document. Start now. Take control today so you're never caught off guard tomorrow. We'd love to hear from you. What was the one financial change you didn't expect after your divorce? Drop a comment below and share your experience. Your story might be the exact encouragement someone else needs to take control of their own situation. And if you found this helpful, please like, subscribe, and hit that bell icon. Because we're building a space where women get informed, empowered, and supported every step of the way. Thank you for being here, and remember, your past may shape your story, but your future is yours to build. We'll see you in the next video.